Hey guys, it's David here. Welcome back to Republic Labs. Continuing our year-end video series, we will analyze the final projections for 2026. While the previous episode focused on markets and applications, today this video is all about infrastructure. Let's go. Firstly, stablecoins are far more efficient and cost-effective than traditional payment systems. And TradFi knows this. It's why fintechs, banks, and card networks introduced numerous stablecoin products in 2025, leading to even more competition in 2026. And since the launch of Plasma, other stable chains have emerged. Plasma is high-throughput L1 EVM supporting cheap transfers for emerging markets, and USDT and Tether are the prioritized products and liquidity. And it was the first to launch, though the XPL token price hasn't seen much yet. Codex is another stable chain, which is a stablecoin focused blockchain, an L2 OP stack. This one is focused on cross-forex payments, facilitating conversions between stablecoins and fiat currencies, and the hope is that it supports more than just US dollars. Pay targets private payments for consumers and corporates requiring privacy, and PayCard is a non-custodial crypto card that doesn't link KYC info to pay balances or transactions. Major corporations are also launching their own blockchains, and you can see the first one being Arc, which is Circle's own L1 solution specifically optimized for their stablecoin USDC, claiming to include privacy features as well. Tempo is a payment-specific L1 incubated by Paradigm and Stripe, which leverages their distribution and operational experiences, and it's not a public ecosystem. It's primarily functioning as a way to serve Stripe's products and also their customers, which are millions of businesses. And despite the variety of stablecoins, non-USD options are still scarce, yet the Forex market is one of the largest and most liquid in the world, with trillions in daily volume, and this is likely the opportunity that Codex and Arc are chasing on-chain Forex. Institutional adoption must follow existing regulations, and this is why the corporate blockchain narrative exists, and KITA offers identity certificates, business licenses, jurisdictional permits, and private on-chain KYC, and it includes features that simplify asset issuance as well, like traditional banks. Another one that you might have seen on circulating around crypto Twitter is Canton, an L1 built for private and regulated entities. Notable participants include Goldman Sachs, BNP Paribas, Deutsche Börse, and Franklin Templeton more recently. Seismic is primarily focused on fintech and featuring payment privacy for checking accounts, savings, loans, buy now, pay later, and even payroll. And companies like Cred and Brookwell are building on Seismic. Mandala is an ecosystem uniting governments, enterprises, and retail for the digital economy, and key applications include private identity, IP solutions for artists, local banks, cooperatives, and the healthcare industry, alongside with other real-world asset solutions. Real-world asset tokenization opens up access to trading and holding of stocks, commodities, and other physical assets in personal wallets without brokers or KYC, which is pretty awesome. Teams like Back Finance, Xstocks, Denari, and Securitize are leading this. On-chain integration also allows traditional assets to connect with crypto assets and the DeFi ecosystem. Derivatives are also present for RWA, with platforms like Hyperliquid, Ostium, and Vest offering leverage for stocks, indices, commodities, and Forex. With hundreds of billions traded daily in TradFi derivatives, the potential is massive here. So real-world assets and stock or equities perpetuals are set to compete. Privacy technology has always been a necessity, but price performance only recently spiked due to Zcash and Monero. However, it's not just about price. Privacy is a luxury, and some European countries, we can already see, limit their citizens' savings and transactions, and China can directly deduct balances from rule breakers. And if you remember, on 2022, Canada froze protesters' accounts. So privacy and the freedom of speech is at risk. And solutions that remain compliant exist, such as zkKYC and zkAML, but we think that for crypto protocols and apps, privacy should be a standard, default, built-in feature. And Pay and Seismic are great examples of this. Solana's 2026 roadmap aims to make it more open and fair than traditional markets through network upgrades and external protocol contributions. First one being Alpenglow, the most significant change in Solana's history. It replaces the consensus mechanism with a faster one and handles network security, and the initial release is expected in early to mid 2026. The other one is Fire Dancer, finally went live on mainnet. The second independent validated client after Agave, which is developed by Jump, and its mainnet launch will diversify Solana's validators. 00 is a network with performance far exceeding the public internet. It utilizes the so-called dark fiber for low latency blockchain communication, and you can think of it as a private internet, similar to how Nasdaq and CME operate. Jito is building BAM, organizes blocks and transactions privately to prevent toxic MEV. Harmonic is a layer that decentralizes Solana block building, and it involves a set of validators bidding on block proposals similar to HFT systems. And then Raikou is the last one here, filling in the gap for certain applications like HFT or clubs that require off-chain computation. So Solana network upgrades are promising and its market structure is maturing. Prop AMMs you can see recently on crypto Twitter stand out because their quotes are significantly better than both DEXs and CHEXs. And beyond spot markets, a new Solana native perpetual platform, Bulk Trade, is also arriving in 2026. Faced with competition from Hyperliquid, Solana is moving faster to build the internet capital markets. Monad is a new L1 blockchain with UX and performance rivaling Solana and Hyperliquid. Its ecosystem is unique and innovative, but launched during a bearish market period. Monad didn't take shortcuts, and they are probably the answer to cynicism in crypto, as John Galt here said. They didn't rush to launch in bull market, they didn't pay the Binance bribe, they didn't pump TVL with insane incentives, and they launched with a solid ecosystem of blue chip apps and tools. And every major L1 ecosystem takes 5 to 10 years to mature, and Monad is only about a month old. However, the first year is critical, so making Monad a must watch for 2026. Which builders will win? Which apps will dominate? Are you positioned correctly? And there are many experiments happening on Monad that haven't been seen on any other blockchain, and with a relatively low token valuation, $400 million in cash held by the Monad Foundation, and the first insider unlocks not hitting until late 2026, there is actually massive growth potential here once the market recovers. So what are your predictions for Monad's first year? And thanks for watching, guys. Hope this has been helpful, and we'll see you guys in the next one. Cheers.